Mm. Good morning, good afternoon, or good evening, everyone, depending on where you're watching us from. So, welcome again to another episode of Property Talk Life, where we'll be discussing practical real estate strategies to help people make informed investment decisions and build long term wealth. So, today's topic is extremely important because many people enter real estate believing just one thing, which is that as long as they buy a property, they automatically make money. But unfortunately, that is not true because many people have bought property that have never appreciated. Many have invested in projects that produce little or no returns, and some have even lost their substantial amount of money. Why? Because they assume that every property is profitable. But successful investors know something different, which is that they understand that real estate is not a game of luck, but a game of strategy. So you don't make money simply because you bought a property. You make money because you bought the right property at the right price in the right location for the right purpose also. And that's exactly what we'll be discussing today. So today we'll be looking at 7 smart ways to find high profit properties even in a difficult market. First of all, you first thing you need to do is to study the market like a professional. One major difference between amateur investors and professional investors is the research. Professional investors really buy property based on emotion or excitement. They study the market, they understand market cycles. And what are market cycles? Every real estate market goes through different phases. There are periods where the prices will rise very rapidly. There are periods where the market will slow down. There are periods when investors are very, very active. And there are also periods where buyers become very, very cautious of which property to buy. And a smart investor studies all of these cycles. For example, when you're buying during a slow market, can sometimes provide incredible opportunities because seller might be willing to negotiate their price at that point. Another thing professional people study is the demand and the supply. You ask yourself, are people moving into this area? Are more people buying in this area than they're selling? Is there strong rental demand in this area? Is there a shortage of quality housing in this environment? Because where demand exceeds supply, the price will eventually rise up. Because but where there is excess supply than demand, the growth will become slow, and the price might have to reduce a bit. So this is why the research is very, very critical, because the people are very smart. They will ask themselves questions, they respect the location, they talk to local residents, they study historical price trend also, they look beyond the marketing brochures. And there's something you should always remember, which is that profit is made before purchase, not after purchase. So the money is often made at the point of buying. Before you buy, you already know how much profit you're going to make from buying that property. Because if you buy wrongly, it will be very, very difficult for you to recover later. So another step is to follow infrastructure development. Infrastructure is one of the biggest drivers of property appreciation. When you see a massive infrastructure project coming into an area, you should pay attention, because infrastructure includes roads, bridges, rail systems, airports, schools, hospitals, shopping malls, business districts, places like that determine the growth of a location when you're buying a property. And why do they matter? Because this infrastructure is what will attract people to that environment, because people want convenience, and businesses also want accessibility, and families that will stay there also, they want good roads, schools, and healthcare facilities. So when the infrastructure in that area improves, the demand usually follows. So let's take road as an example. If there's a community with poor access road, they will not attract many buyers. But once the major road is constructed, then the accessibility improves, because more people become interested, then the demand will increase and property value will begin to rise. The same thing happens with bridges also. Bridges reduce travel time, and they open up previously inaccessible locations. Like when there are places that you cannot take a route from one route to another, but when there's a bridge, you can easily go instead of making a U-turn and then taking a very long route. So all of this place makes it very, very accessible for people that will stay in that environment. Commercial development also play a huge role, because when businesses move into an area, jobs are created, people will relocate. There's a demand for housing. The demand for housing in that vicinity will increase also. And as the demand increases, the value of properties in that area will appreciate. Also, government projects can also transform the entire community. Successful investors They usually monitor government policies and development plans. They position themselves before everybody even notice. So another step you should take is identify growth corridors early. One of the secrets of wealthy real estate investors is early positioning. They buy before everyone does. Most people buy after the area becomes popular. Professionals buys it before it becomes popular, and that requires vision. You must learn how to identify growth corridors. Growth corridors are locations that are expected to experience significant development in the future. So how do you identify these corridors? You look for new infrastructure projects, population expansion, commercial activities, government attention, increasing developers presence. Population movement is especially important because when people are moving, demand follows. Where people move, demand follows. And where demand follows, the property value will definitely rise. The biggest profits in real estate often come from buying very, very early because when everybody discovers the location, the price may have already increased substantially. So the biggest profit usually go to those who position themselves early. So another thing you should know is for you to use data and not your emotions. Many people make emotional investment decisions because they buy because they like the appearance of the place, or they buy because the salesperson spoke very well. They were convinced. And some people buy because everyone else is buying. But smart investors rely on data because data tells you the truth about that property you want to buy. And one important metric is the rental demand of that property. You ask yourself, are people willing to rent here? What are the rental rates? And also, how long does it take for landlord to secure tenants in this area? Because another metric is the vacancy rate. Vacancy rate simply refers to the percentage of empty properties in an area. If many properties remain vacant for a long period, that's a warning sign for you to quit. Because price trend are also very, very, very important. You need to study the historical data of that place. How prices moved over the past 5 years in that location? Are the value rising steadily or are they stagnant? Emotional buying often destroys return. So you should never buy simply because a property looks beautiful, because beauty does not always equal profitability. You get so a beautiful property in the wrong location can still perform poorly, and always let data guide your decisions. So step 5 is for you to look for distress opportunities. Many profitable opportunities are hidden, so they don't always appear on flashy advertisements. Sometimes the best deals come from distress opportunities. Where what are distress opportunities? There are situations where sellers are motivated to sell very quickly, and reasons may include financial difficulties, relocation, debt obligations, family settlements, and business challenges. So when this happens, sellers might be willing to negotiate significantly, and this can create excellent opportunities for those that are investing. Because some investors build their wealth by identifying undervalued properties, and these properties may require renovation or repositioning. But after the improvements, the investor either rents it or resell it as a higher value. And you should always remember that hidden opportunities often exist because others are not paying attention. So that is why you should rely on data instead of using your emotion to buy a property. And also make your research before you eventually pay for a property. So another step is to understand the demand before you buy. You should not invest without understanding what the market actually wants. Many investors build or buy properties that nobody needs, and that is very, very dangerous because every market has unique demands. In some areas, two-bedroom apartments will be in high demand, and in other areas, luxury apartments perform better. Some locations may have strong demand for short-let apartments, and others may favor commercial development instead. But successful investors match their products to market demands, and they avoid oversupply. If too many similar properties already exist in an area, the return may become weak. So before buying, you ask that what is your target market? What do they really want in this area? And can people afford that property you're about to put there, the value of that property you're about to put in that location? Is it something that people will be able to afford? And then you should also ask yourself if there's enough demand for you to invest in that location. Because real estate is not just about building, it's about solving people's accommodation needs. And lastly, the last point here that I'm talking about is for you to always have an exit strategy. So before investing, you should always ask yourself, how do I intend to make money from this investment? You should never enter an investment blindly because there are several exit strategies. There's flipping, you can flip, you can buy below the market value, improve or hold it, and then you sell for a profit. That's called flipping. Another one is the rental income. You can generate consistent cash flow through tenants from that property. Another one is long-term holding. You can buy and hold for future appreciation. You don't need to renovate or improve it. Just buy and hold for future appreciation because the value will definitely increase. You should always have a very clear objective because without an exit strategy, you become very, very confused as an investor, especially when the market condition changes. So, and then you should always remember this very important statement whenever you're about to invest or exit um, an investment in real estate, which is you should never enter an investment without knowing how you intend to exit. Once you're entering into an investment, you should know that, okay, what if the market condition changes? What if things do not go as we planned? Then you should have a very structured exit plan that will save your time and also save your money so that you do not lose money, you do not lose more than you gain from that investment. So today we've discussed very 7 powerful strategies. First one is to study the market. The second one is to follow infrastructure. Third is to identify growth corridors early. The fourth one is to use data and not your emotions when you're buying a property. The fifth one is for you to look for distress opportunities as you can get more profits when you are able to locate distress opportunity like markets that are under duress that you can buy because they're undervalued and they make enough profit from. The sixth one is for you to understand the demand in that area that you're about to invest in. And number 7 is to always have an exit strategy. But overall, the truth is that successful investors do not simply buy properties, they buy opportunities, they buy potential, they buy future demand, they buy strategically. Because if you consistently apply these principles, your chance of succeeding in real estate it will increase significantly and you see it. You definitely experience it. So thank you very much for joining us on Property Talk Live today. Don't forget to subscribe, share this session, and reach out if you need professional real estate guidance. See you in the next episode. Bye.